This video is sponsored by TipRanks. Link in the description below for more information. Welcome back, guys, to another episode of our monthly retirement portfolio series where I disclose 100% of my positions and be completely transparent with you guys on any stocks that I buy, sell, or hold in this portfolio. And in October, we had a busy month with changes in the account, so let's get into it. The first thing I really want to address here is the account balance, total holdings. And you'll notice that this is near an all-time high of almost $34,000. And some of this is from capital appreciation and dividend income, yes. However, in October, I did actually fund this account with an additional $3,000. So that contributed to a bulk of this raise. So I just want to get that out of the way and just clear things up. Although we did have an incredible month in October, a good chunk of the gains did come from a funding that I actually provided as well. Now, looking at the overall performance of this portfolio, it's not doing too bad here. We're actually up around 9.83% so far totally since we started this in July. And really for this short time period, I think it's actually a pretty good gain. You can see down here that my portfolio has actually outperformed the S&P for pretty much every single month. July was the only exception, but we only had a few days or maybe a week or so in July. We didn't start at the beginning of July. But ever since then, August a full month, September a full month, October a full month, and so far we're in November right now as I'm filming this video, and we're actually up as well on this compared to the S&P 500. So far this portfolio is doing incredibly well. I'm happy with it. I'm happy with the performance. But really, this is a 30-plus year portfolio. I'm looking for the long term in this. So all these short-term gains don't mean that much to me for this particular portfolio. Now, I want to jump over here on the left-hand side to my holdings because there were quite a few things, like I said, that changed this month. Now, what I'll do is actually go through line by line here with these stocks, just give you a quick rundown on my thoughts on where the stock is currently and if I plan to buy more in the upcoming month or months. So first off, you can see my cash value up here sitting at around $5,000 or so. So that's currently where it is, and I do want to deploy that sooner rather than later. Hopefully by the end of this year, we see more value in the markets. Now, the first holding here, my largest holding in this portfolio is Altria, and I currently hold almost $8,000 of the stock in this portfolio. If I expand this here, it'll actually tell you that I have 170 shares of Altria. Average cost basis is 44.95, which means that I'm currently sitting at around a 3.24% gain on this stock. Yes, in October I did buy more Altria. I actually added 40 shares to this position, which is why it's at 170 now. And I actually got it at a pretty good value of around $40.56, so that brought down my cost basis a bit as well. Now, do I plan to buy more Altria in the upcoming month? Possibly, however, it is highly allocated right now in my portfolio, which is why I've slowed down the buying on this stock. Next here we have AbbVie. If we expand AbbVie, you'll notice that this position I've also added to in the last month. I added 20 shares of AbbVie at around $72.10. Now that brings my cost basis here to $70.15 with 63 shares in total. AbbVie is one of those great performers in the portfolio, up over 22% so far in just a short period of time. So we're doing really well in this position. I don't really plan to add any more to AbbVie right now at these prices. However, if we come back down to the 70s, maybe mid 70s, low 70s, that's when I'll consider adding more AbbVie. Next up, we have Boeing. Boeing is another company that I absolutely love. I actually added more to my Boeing position as well. So I added 7 shares here now for a total of 13 shares in this position. And my average cost basis is $353 here in Boeing. And you can see with Boeing, we're up around 3.92% as well. So we're up a good amount here on the stock, and I think we have a lot more upside here when it comes to capital appreciation. Now, Boeing is another company that I do want to add more to. However, now the stock has started to trend up. We did get some good news today on the 737 MAX that they do plan to fix it and kind of have them back on the road next year. So I really do think that the stock is actually headed now to $400 per share sooner rather than later, in which case I will not be adding more Boeing to my position. Now, moving on down the list, I actually did not add any more to these existing positions. 3M, we have 27 shares, 160 cost basis. We're up around 6% on this position. I don't plan to add 3M at these prices. However, in the low 160s or lower, I will add more 3M. Lowe's, we're actually doing very well on this, 18%. I only have 21 shares of Lowe's here with the $96 cost basis, almost $97. No plans to add at this current price. Caterpillar, another one of our great performers, up 24%. Actually, it's our best performer here on this list. And Caterpillar, I only hold 10 shares of, which equates to around $1,500 or so. And my average cost base is $119. So we're up quite a bit on Caterpillar. Do I plan to buy more at these prices? Absolutely not. However, if we come lower, I may consider it. Moving on down here the list, Texas Roadhouse, another one of our great performing stocks, 14% up here on this position. We have 25 shares of Texas Roadhouse, average cost basis of $51. And after a recent earnings report here, you can see on the chart, the stock really took off. And we actually hit close to $60 per share, I believe. Yeah, over $60 per share. And I think the stock will actually trend higher in the foreseeable future. And I have no plans to add more to this position. And finally, closing off my stocks here in this portfolio is Pfizer, up around 6% or so, nothing too great here. However, Pfizer, it's a very small position of mine, only around $700 or so, 20 shares. I didn't want to add too much Pfizer here just because their dividend history has not been the greatest. I do believe that they will continue growing that dividend moving forward though. But that being said, I do have AbbVie, which is a good pharmaceutical stock, and I may also add another pharmaceutical stock in next month or so, which is why I want to keep my exposure to Pfizer fairly low. However, that being said, current prices are tempting. I may add more to this stock. However, if we go down to the low 30s or even lower, I will almost definitely add more to this stock. Now, if you watched last month's video, you'll notice that there are a couple stocks here that are missing from this list. And yes, that is because I actually did close 2 positions from my portfolio. I've said time and time again that my investing strategy is buy and hold unless something fundamentally changes. And well, I just felt that these positions I sold off didn't belong in here anymore, and I'm going to explain why. So as you know, every single one of these positions is a dividend paying company, but not only that, they're a dividend growth company as well. This means that these companies will continue raising their dividend year over year for the foreseeable future and even for the long term. And then eventually in 20, 30 years or so, my yield on cost I expect to be incredibly high, which is when I'd actually want to use that dividend income to pay for bills and things like that. So it's incredibly important to me to find companies that I think will have sustained dividend growth over the future, and the 2 stocks I hold did not instill that confidence in me. So the first position is actually PetMed Express. So let's just open up PetMed Express here. You can see this stock was actually one of the stocks that I've talked a few times about on the channel. It's one of my best performing stocks really of all time. And that's because I believe PetMed Express was undervalued. However, now I believe it is probably fairly valued or maybe even overvalued. That being said, I had 44 shares of this stock in my portfolio with a cost basis of $16.98. And after the latest earnings report, the stock actually popped much higher here. We can open up the charts. You can see we went up, slowly trended up to around $18 and then popped to around $27 or so. I then went ahead and actually sold off this position at around $26.75 per share for one main reason. PetMed Express had actually been experiencing declining volumes, and I've held the stock for a little while for a possible turnaround play. However, the trend here with the latest earnings report showed me that this business will continue declining, and sooner or later, the dividends may have a possibility of getting cut, and I do not want to hold a stock where that is a realistic possibility. So that's why I had a good gain on PetMed Express here. We were up over 60% on the stock. Took my money, I took my gains, I closed the position, and I'm happy with this. The next position that I actually closed was FedEx. Now this one might actually surprise some of you. FedEx is a stock that I bought into and I was actually pretty optimistic on, and I started reading through their financials, some of their income statements, balance statements, all that kind of stuff, and I was actually planning to add more to this position. However, the more I read into it, the more I wanted to close off this position. Now FedEx I actually had around 9 shares of in total, with an average cost base of $159.79, but I closed this position off at $158.83, which is a very slight loss here. However, I would consider this more or less a flat trade. But the reason I really sold the stock was because I was not that happy with the free cash flow trend. It did not look to me that this business was actually turning in the right direction when it comes to free cash flow. And for those reasons, I decided I did not feel comfortable holding this for the long term. I did not feel that their dividend was sustainable long term. And that's why I closed off FedEx in my portfolw. Now, looking at my holdings right now, we can see that I have, what is it, 1, 2, 3, 4, 5, 6, 7, 8 stocks in here, which is a good amount. I do want to add a couple more in, which I do have plans to do in November if those stocks go a little bit lower. But as of right now, I'm actually pretty happy where this portfolio sits. Analysis here shows me that I'm pretty decently diversified. I mean, I have a lot in consumer goods because of Altria, but then we're, healthcare, industrial goods, services. We have no tech in here, but that's okay. I think eventually we will find some value in tech stocks, which is when I'll add to my tech positions. But you can see, like, overall this portfolio, I think it's a very strong portfolio, a very low risk compared to the average portfolio here, compared to the market even. High dividend yield. Overall, estimated amount is about $1,000 per year currently with my current positions, and this will only continue growing as I keep adding more to my positions. And my average PE here is around 31. However, for PE, I believe for these stocks is probably closer to the low 20s, which is something that I'm comfortable with. But again, these are long-term hold, guys. These are companies that I believe will be here for a very long time while paying and increasing their dividend. So it's not something that I'm too concerned about personally. Now, hopefully November will present some opportunity here for me to actually deploy some of that $5,000 that's sitting in cash. Maybe some big names like possibly McDonald's will be added to the portfolio, but we'll have to wait and see if the price is right on that. But either way, you'll have to wait till next month to see what moves I actually do end up making for the month of November. Now remember, everything I showed you today was on the TipRanks platform, and if you like the layout and the way everything was presented and the way you can organize your portfolio and figure out what's going on with your positions, make sure to check out these guys. And if you want to sign up with one of their premium packages, use the promo code POSITIVE2019 and you will get 10% off that monthly price. Now, if you're not sure if you want to pay for this, you can also sign up for free, try it out. I encourage you to actually explore this platform because there's a ton of tools in here that'll help you become a better investor. But either way, guys, thank you so much for watching. Don't forget to invest positively. Don't forget to hit that subscribe button down below if you haven't done so already, and drop a huge like on this video because that's what keeps this channel going and that's what keeps this series going as well. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.